Nick Robinson, Aberdeen's Latin American equity fund is up around 18% year to date, but it's been very volatile. Do you expect that to continue throughout the rest of the year? And what are your expectations for 2013?
Yeah, I mean, we expect it to continue to be quite volatile. You've still got these problems in Europe, which are as yet unresolved. You've got a slowing China, which is likely to create some volatility, particularly in the more commodity-focused sectors within Brazil. So yeah, it's likely to stay volatile. 2013 is likely to be fairly similar as well, I expect, as it's still going to take a while for these issues to be sorted.
Now, one of your largest positions is Vale, the iron ore producer. They ship a lot of it to China, which you mentioned is slowing. So do you plan to trim some of that position, or are you going to stick with it?
We've been doing almost a reverse at the moment, in that recently we've been topping up that position. We think there's good value in those shares. We think that they're paying a very healthy dividend yield. We think the outlook over the long term is quite attractive, but at the moment we've been given an opportunity to add more to those shares.
Another trend we've been seeing in South America is nationalization. In Venezuela, you've seen Chavez win, and in Argentina, you've seen Kirchner take over some industries. Does this trend worry you at all, especially when you look at Brazil, because Brazil relies a lot on Petrobras?
I think Brazil's a very different place from Argentina, Venezuela. The government's much more focused on the market and market friendly. Having said that, though, there are issues with the government in Brazil in terms of how they've been a bit more involved in some of the day-to-day issues with the management of Petrobras, and that's a concern, but I'm very confident that's not going to go down the same path as Argentina or Venezuela. Another
big concern is in Mexico, and those are the drug wars. You have a lot of Mexican holdings in your portfolio, América Móvil, among others. Does this concern you?
It's something we ask companies that we invest in Mexico if this is a big issue in terms of their business. Sure, it looks pretty ugly if you read the papers on what's going on in Mexico, but the companies on the ground are actually telling us quite a different story, in that it's not really affecting their business. So we think, at least from a kind of bottom-up stock picking basis, there's not too much to worry about on that matter.
Finally, if there's one country or company that you consider a sleeper in the Latin American market, something you really expect to outperform in 2013 where no one's looking, what would it be?
I think that's quite a tough question. You know, the companies that are quite cheap at the moment and potentially could outperform next year would be, say, the Brazilian banks. They've been hit very hard recently on some of the government intervention that's been going on. So potentially there's a valuation opportunity there. You know, if the government does step back from intervening in these companies, then these banks could potentially perform quite well.